So markets woke up today and chose policy whiplash. Okay, a US Supreme Court tariff decision followed by a fresh 15% global levy headline, and suddenly the dollar softens, silver surges, and tech futures start walking on eggshells. It's like the market finally sat down with a cup of coffee and someone spilled geopolitics all over the table. So the real question today is, are we seeing a temporary shock or the beginning of another volatility cycle? So before you place your next trade, watch this.
Why is fast trade execution a must? Because you're more likely to get the entry price you want and the exit price you want. Reliable, rapid, responsive. Join ATFX today and let's get you started.
Good morning, I'm Francois, your market analyst here at ATFX Africa, and welcome to your daily market brief. Today we are breaking down Forex, commodities, and indices, three markets reacting in real time to tariff uncertainty, geopolitical tension, and a critical earnings catalyst later this week. Let's kick things off with currencies. Euro USD is trading around 1.182, recovering after recently hitting its weakest level in months. The catalyst here is that US Supreme Court overturned the US president's broad emergency tariffs, which weakened the dollar. But almost immediately, markets had to digest a new headline, a proposed 15% global tariff. That kind of policy pivot creates uncertainty, and FX markets don't love uncertainty. At the same time, Eurozone PMI data came in stronger than expected, showing private sector activity expanding and it's at its fastest pace since November. Manufacturing growth surged at the sharpest rate since August 2025. Services activity strengthened, and the ECB president confirmed her intention to complete her term, removing leadership uncertainty from the equation. So while the euro is rebounding, it's still balancing against a Federal Reserve that remains divided on rate cuts. So despite today's recovery, the euro is still on track to weaken slightly, pressured by Fed minutes showing policymakers split on rate decisions. So in simple terms, we have stronger Eurozone data plus weak dollar equals rebound, but Fed uncertainty equals caution. Looking at the charts, the pivotal area here is the 1.183 level, which is the 50% Fibonacci retracement level. A break to either side could determine Euro USD's fate. Support zones are as follows. Near-term support is currently sitting at 1.177, followed by 1.169. Resistance is currently at 1.189, followed by 1.196. The stochastic is near 65, approaching overbought territory. So technically, momentum is strong, but it's getting warm. So a fresh headline supports it, resistance level could come into focus. And if policy clarity returns to the dollar side, this rally could cool really quickly. Let's move over to commodities. Silver is trading around $87 an ounce, extending gains for a fourth consecutive session, as silver right now is wearing two hats: safe haven and industrial metal. Tariff uncertainty has boosted safe haven demand, while geopolitical tension, particularly surrounding the US-Iran developments, has added a risk premium. As stated earlier, the US president raised a global levy from 10 to 15% after the Supreme Court ruling. Europe's trade chief is considering suspending ratification of a trade agreement with the US, and India has delayed trade talks. Meanwhile, nuclear negotiations with Iran remains stalled. That's a lot of headline fuel. And to that, the reopening of Chinese markets after a very long holiday for Chinese New Year, which could increase trading volume, and silver has been firmly bid. But here's the nuance. Over the past month, silver is still down over 16%, despite being up more than 170% year on year. That tells you volatility hasn't left the building. Looking at the charts, the latest technical snapshot shows the following. The stochastic is around 90, clearly overbought. The broader technical summary combining all momentum indicators shows strong buy. However, Port is currently sitting at $84 an ounce, followed by 78, and resistance is currently at $93 an ounce, followed by 103. And traders, when you see strong buy and overbought in the same sentence, it doesn't automatically mean reversal, but it does mean momentum has been aggressive. So if risk headlines persist, silver may stay supported. And if headlines cool, sharp pullbacks are possible. So silver right now isn't calm. It's compressed and reactive. Let's finish things off with equities. The Nasdaq 100 is trading around 24,795, down 0.9% on the session, but beneath the surface, there's tension. On Friday, US indices finished higher after the Supreme Court blocked emergency tariffs. The Dow was up 0.5%, S&P up 0.7%, and Nasdaq up 0.9%. But today, futures are cautious against the 15% global tariff headline, reintroducing uncertainty. And this week brings another major catalyst, Nvidia earnings. And that matters because Nvidia's weight in the index means its performance can influence the entire AI complex, and by extension, the Nasdaq. So we're looking at tariff uncertainty, global tension, high-profile earnings. That's a volatile cocktail. Looking at the charts, the current pivot point is sitting at that psychological 25,000 barrier. A break to either side could decide this index fate. Support is currently sitting at 24,650, followed by 24,400, with deeper support at 24,160. Resistance is at 25,200, followed by 25,500. And that high level at 25,900. Short-term moving averages are leaning bearish. Medium-term moving averages are leaning bullish. Translation? This is not a clean trending market. It's a market that can change personality really quickly, especially when headlines hit. So stay reactive. Traders, that brings us to the end of this session. And as we are heading into this week and into today's session, 3 key drivers you should be monitoring. First things first, tariff clarity. As a trader, understanding what is permanent and what's negotiation posture. Then, geopolitical updates, US-Iran developments can shift risk appetite intraday really quickly. And then finally, Nvidia's earnings. This could be the volatile trigger for Nasdaq 100 because right now markets aren't directionless. They're just waiting. And waiting markets can move fast once they decide to. And with that, we wrap up your daily market brief, brought to you by ATFX Africa, the broker that gives you an edge in today's markets. Head over to ATFX.com and go and experience the difference for yourself. Traders, until next time, stay sharp, stay focused, and trade smart.